Hello, I'm Tanner Aherin with the CattleFax Closing Bell. Today's Closing Bell is sponsored by Zoetis. Draxxin delivers more from the start. Using Draxxin injectable solution on arrival can help give cattle a healthy start with fewer costly retreats. Draxxin demonstrated 50% fewer retreats in several studies. Learn more at draxxin.com. Over the past 2 weeks, the corn market has had a couple major grain reports to digest. Last week, the USDA released a prospective plantings report that showed the results of the survey that was conducted in early March. Intentions for planted acres in 2020 exceeded all industry estimates, totaling 97 million acres. This is the second highest on record behind 2012. Combine this with trendline yield, and record corn production would occur for the 2020-2021 market year at 15.8 billion bushels. Only time will tell if these levels are actually achieved, and of course, cooperation from Mother Nature will be necessary to avoid any planting complications like last year. This week, the monthly WASDE report was released with several revisions to the demand side of the equation for the 2019-2020 corn crop. USDA increased feed and residual usage by 150 million bushels, but this was more than offset by dropping ethanol demand by 375 million bushels. These changes caused ending stocks to surpass 2 billion bushels, and the ending stocks to use ratio increased from 13.4 to 15.1%. The slowdown in demand and large expected supply will keep corn prices in check going forward. On the cattle side, the Fed cash market continues to feel the wrath of the coronavirus. This week, Fed cattle traded at $105 per hundredweight, which was mostly $7 to $8 lower than last week. What is more intriguing about the last 2 weeks is the light volume that is traded. As packing plants cope with the effects of COVID-19 and implement social distancing protocols within their plants, efficiencies have suffered, causing lighter harvest levels than forecasted, which should continue in the short term. This creates softer demand for fed cattle, which was certainly evident. Last week, only 25,000 head of negotiated sales were reported in the 5-area region. This is compared to a massive 89,500 head the prior week and 69,000 the year before. To wrap things up, feeder cattle traded mostly $1 to $7 a hundredweight lower this week, while calves were mixed from $2 higher to $5 softer. This puts the U.S. average 550-pound steer price just over $158 a hundredweight. Thanks for watching, and remember, visit CattleFax.com to become a member and receive the latest market news and analysis.